Hey, what's up, guys? This is Tom, the Action Accountant, and as part of my No Stupid Questions series, today we're going to talk about what is an IPO, and specifically, we'll be diving into Coinbase since it just IPO'd yesterday. Let's dive in, shall we? I did it. All right, so IPO stands for Initial Public Offering. DPO, which is what Coinbase technically did, is called a Direct Public Offering or Direct Placement. IPO stands for Initial Public Offering, and DPO stands for Direct Public Offering, which is technically what Coinbase did yesterday as they first started to trade on the market. So let's go ahead and break that down even more and talk about what does it even mean to be a public company. So a long time ago, in the 1930s, part of the stock market crash, there was public companies. People would buy and trade these shares of these companies, just like they do today, except for back then it would have been, there's literal pieces of paper that would show your ownership. And now we've got the digital brokerages like Schwab and Ameritrade and Robinhood and whatever else. And basically, it was ripe with fraud and all sorts of problems. And so, as part of the market crash, the SEC, or the Securities Exchange Commission, was created and created a whole bunch of rules that said you have to follow these rules in order to continue to be traded as a public company. So basically, and maybe this is too deep, but diving into that is saying, hey, I'm a public company. I'm willing to submit to these accounting rules to make sure that investors are protected and have appropriate amounts of information required to be able to have a good investment thesis or backing, so they can understand what they're buying and why they're buying it. So, and I think I alluded this to in a different video, but basically, you and I can't just go down to the corner store and buy into it necessarily, or not in a traditional sense. So that that's a private company. I work for a private company. There's 4 or 5 employees. The guy that started it is the owner, and he owns all of it. He has the capability to potentially sell some portion of it to one person or one group of persons, but that's not the same as being a public company. So what tends to happen is a private company grows a certain amount, and they're going to go through traditional growth phases where they're able to get loans from a bank, and they're able to utilize that money or that capital to meet goals and meet growth goals. But at some point, they need to get to a point where they need to raise lots of money from any group, pretty much anywhere. So, but across a market, across the open capital market, you have access to a lot more equity dollars. So, in an initial public offering, a company has shares of itself as part of it's considered treasury. They own shares of themselves, and they're able to sell them, and they're gonna sell some percentage. So say 20, 30, 40, 50, 80% of the company could go public and presented as shares to buy by any bank, any fund, or any person. Even you and I through Robinhood or whatever could swipe up and buy a company. And so when the initial public offering happens, normally, or in an IPO specifically, you work with a backing bank and sometimes a secondary bank, and you're going to sell them those shares. And those investment banks are brokerages, and they are going to help facilitate the sale of those shares across the market to everybody. And then on that IPO day, on that initial public offering day, that's when all the funds and you and I as an investor and all the other banks are going to now a direct public offering DPO that a company, and again Coinbase is similar but different. You're actually taking shares that insider privately, and you're taking those shares and you're taking those public and selling them. And so SEC requirements that are expensive and difficult to manage, and you can be. And so if you're a company that's just trying to grow, you don't want to spend $1 billion just to have access to $10 billion. That's not ideal. But they still have to do all of the due diligence stuff. They still have to. All right. So to break this down, an IPO is the traditional means of a company going public. DPO is becoming mainstream because some of the biggest tech companies, so Coinbase yesterday, Spotify last year, and others have been doing that, and they're doing that to cut costs and to be able to allow their employees. I think that's a quick little good introduction of what an IPO is. And so, with that said, um, if you like to continue to hear more about what I'm doing and my education, go ahead and come join me at twitch.tv/theactionaccountant, or you can visit me at theactionaccountant.com, where you can sign up for my weekly Sunday night portfolio update and kind of market research for the week.